Fundamental Analysis Part 2, Stocks. This is a very short tutorial on introduction to stocks. What are stocks? Stock is a type of security that signifies ownership in a corporation and represents a claim on part of the corporation's assets and earnings. To explain stocks, let's start with an example. Let's say Mr. Bob owns an electronics store named Digital Electronics. Now Bob wants to expand his business, but he has shortage of capital. Now there are many ways from which Bob can raise additional capital. Few of them are: 1. Issuing stocks. 2. Issuing debentures. 3. Issuing bonds. 4. Bank loan. Let's now assume that Bob decides to raise the capital through issue of stocks. Let's assume that Bob decides to raise 100,000 rupees through the issue of 10,000 shares. Now Bob's entire business is divided into 10,000 parts. And these parts are nothing but shares of the company. Since Bob wants to raise 100,000 rupees through the issue of 10,000 shares, each share that is issued will be worth 10 rupees. That means if you buy 100 shares of Bob's business, you are the part owner of the business. Buying 100 shares of the company, out of the 10,000 issued, you will own 1% stake in Digital Electronics, which means that you will have claim on 1% of the company's assets. In simple, stocks are nothing but the security issued by the company. And the owner of the stock is also a part owner of the business, and he will be having claim over the company's assets and earnings. Here we come to the end of this short tutorial on introduction to stocks. Please like and subscribe. Thank you.